Hey everyone, C3.ai announced third quarter fiscal year 2024 earnings results on February 28th. So in this video, I'm going to provide an update to my recommendation for C3.ai stock. I've reviewed these earnings results. I'm going to share with you the big picture items from those results, and I've updated my recommendation. Remember, coming into these quarterly results, I did not have C3.ai rated as a buy. I did not have it rated as a buy. So you're going to want to tune in to see if I'm upgrading, downgrading, or keeping C3.ai stock rated as a hold as it was coming into the quarter.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so C3.ai reported total revenue of $78.4 million, which was an increase of 18%. Solid revenue growth for a company that had difficulty growing in 2023. It looks like demand from its AI services are starting to show up. Remember, in 2023, in the spring, summertime, they launched their new AI service, and they told investors that they were going to pilot these services with enterprises, and they were going to start to see the results of those pilots starting in late 2023, early 2024. And we are indeed starting to see some benefits of those pilots. Total revenue was an acceleration from the previous quarter. Now, the company has a strong balance sheet with $723 million in cash equivalents, and marketable securities. Although C3.ai is still a money-losing company, they're losing significant sums on the bottom line, which we're going to see a little bit later in the video. So in the third quarter, the company closed 50 agreements, which was an increase of 85% year over year, including 29 new pilots, which is an increase of 71% year over year. Remember, a pilot is just C3.ai getting a company to agree to allow C3.ai to go in there and offer them a free trial. So it's not a deal as in like a contract signed for a sale. It's a deal as in the company is allowing C3.ai to come in and offer a pilot service for several months so that C3.ai can prove to the company the value of its service. And then after it proves the value of its service, it can go to the company and say, look at the value we add to your company. Why don't you go ahead and extend this agreement for a certain amount of money for a certain amount of time? That's the hope with C3.ai, and that's the hope investors have, that the demand for its service will increase and C3.ai will gain traction and revenue will start to increase at a faster rate. So in the latest quarter, they did announce 3 deals, one with Holcim, a European leader in sustainable building solutions, with DLA Piper, a global law firm pioneering technology, and the law enforcement departments in San Mateo County. So relatively small deals for a company with the market cap of C3.ai, but it's progress, and this is what I wanted to see from C3.ai. I wanted to see demonstration that these pilots were turning into sales, were turning into contracts, and we are seeing that. Even if they are small deals, they are deals, and hopefully C3.ai can continue the momentum. If it serves these clients well, the positive word of mouth could lead to further contracts and increasing contracts with law enforcement departments outside of San Mateo County if they prove their value with San Mateo County. So C3.ai's federal business continues to show significant strength, with the federal revenue up over 100% year over year and bookings up 85% year over year. That's significant progress. That's what C3.ai investors like to see. We hope to see more of this going forward as the company gains traction. The better it serves these customers, especially government customers, the more traction it can get because it can prove its concept. Other businesses will look at C3.ai and say, look, if the federal government trusts C3.ai, then maybe we should too. At least give them an initial look and see what value they can add. Remember, that's kind of how Palantir gained momentum, right? It proved its value to the US government, and that reputational boost led it to now lock in deals with enterprises. So maybe C3.ai can follow that similar path that Palantir has followed. Although it is difficult, it's not sure that it will achieve that. it's on a nice path. Additionally, C3.ai is forecasting $308 million in revenue at the midpoint and another year of losses on the bottom line, with a non-GAAP loss from operations of $119 million at the midpoint. The GAAP loss from operations will be worse than that. So losses will continue for C3.ai at least for another fiscal year. So while total revenue increased by roughly 12 million to 78.4 million, up from 66.6 million, the loss from operations increased by 10.5 million. So C3.ai demonstrated little operating leverage. Their costs went up by almost as much as their revenue went up. That's not very impressive from a business standpoint. For the 9 months ended January 31st, their revenue went up roughly 30 million, while their costs, their loss from operations, went up by less than 19 million. That's better operating leverage. Your cost, your loss from operation shrunk compared to the growth in revenue. So some progress there, although ultimately what investors like to see is when revenue grows, the loss from operations decreases. You lose less money as your revenue grows because you scale some of your fixed costs, but that's not what's happening for C3.ai. And the bulk of the increase in spending is coming from sales and marketing, a category that makes the revenue growth look less favorable. Because if you're spending more money on sales and marketing, it makes it easier to grow revenue because you're offering incentives, discounts, promotions, adding sales personnel. It makes it a lot more easy to make sales. It's in contrast to another AI company that I've been following a lot of late, and that's SoundHound AI. And what I said about SoundHound AI that was so impressive was that they increased revenue by 80% in their latest quarter, while at the same time decreasing their sales and marketing expense by over 30%. That's demonstration of more organic demand for your service, for your product, if it's growing nearly 100%, while at the same time you're decreasing sales and marketing spend. So that makes C3.ai revenue growth look less impressive because they spent so much more on sales and marketing in the latest quarter and in the latest year. In another positive sign for the company, in the 9 months ended January 31st, their cash flow from operations improved. This is what I would like to see in operating income as well. But cash flow from operations, the loss, was negative 83.7 million in the 9 months ended January 31st. In the same 9 months ended 2023, it was 142.7 million. So they are demonstrating leverage in this financial metric. I would hope to see it in the income statement as well, in addition to the cash flow statement for C3.ai. Finally, the stock is trading at an expensive forward price to sales of 10.54. And given the losses on the bottom line and relatively limited operating leverage, with yet to be seen growth, organic growth in demand for its services, right? The services were coupled with an increase in sales and marketing spend. So organic demand is not robust just yet for C3.ai, although I will admit they did demonstrate nice revenue growth, but it came with also increase in sales and marketing. So I would like to monitor the company for another 3 months, another quarter or two, to see if there's organic demand for its service. Can it grow its revenue while keeping other costs constrained and therefore demonstrating leverage in the business? I'll keep watching it, but for now, I'm keeping C3.ai stock rated as a hold and not a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.